They used to say that there are two things you cannot avoid, death and taxes. To us, the adage still applies, but the rich are different. Do we want to be like the rich, or do we want to force the rich to be like us? In this lecture, we will learn how taxes work. In the next lecture, we will learn what taxes buy and whether they cost jobs. We will also discuss tax avoidance and tax evasion. To see how taxes work, let's look at school lunches, a program that is too often in the news. Suppose there are four families with different levels of income. A poor family earns $10 a day, a low middle income family earns $50 a day, a high middle income family earns $100 a day, and a rich family earns $1,000 a day. Each family has one child who eats lunch at school. The cost of the lunch is $4. Families with daily income of less than $25 get lunch free. All other families send their kids to school with $4. They also pay a tax that finances the free lunch to the low-income family. How much would this tax be? Suppose that the first $25 are deductible. This gives us the taxable income column. Suppose also that the tax rate is the same for all families, regardless of income. This tax is called flat rate. Among them, the families need to collect $4 in taxes because this is the cost of the lunch that the poor family will get. Total taxable income is $1,075, and this, multiplied by the tax rate T, yields the $4 that they need. What is T? We divide both sides by 1,075 and we get the tax rate. This number means that when the taxable income is $100, the tax is 37 cents. We now apply this tax rate to the taxable income to get the tax that each family would pay. The low middle income family would pay 9 cents, the high middle income family would pay 28 cents, and the rich family would pay a tax of $3.63. The total lunch expense of each family consists of two parts. One is the payment for the lunch of its own child, and one is the payment for the lunch of the child of the poor family. The low middle income family pays altogether $4.09, the high middle income family pays $4.28, and the rich family pays $7.63. What if the law is changed and the school lunch program becomes universal? All children get lunch free. In this case, the tax revenue will have to be $16 instead of $4, and the tax rate will be 4 times higher than it was before. Instead of 37 cents, it would be $1.49 for each $100 of income. Applying this tax rate to the family's taxable incomes yields the taxes that each family would pay. The low middle income family would pay 37 cents instead of just 9 cents. The high middle income family would pay $1.12 instead of 28 cents, and the rich family would pay $14.51 instead of $3.63. Do the middle income families want to pay a 4 times higher tax rate? Of course they do. The tax is higher, but the total cost of lunch is lower. The families no longer have to pay for the lunch directly. The tax is the only cost, and for the middle-income families, it is lower than the cost of lunch under the means-tested program, and it is also lower than the cost of a single lunch. To the middle-income families, the savings are significant. To the rich, the program is costly, but even after tax, they remain rich. Note that even though rich and poor pay the same tax rate, This flat rate nevertheless redistributes income from the rich to the middle class and to the poor, and therefore a flat rate tax is utilitarian. In a progressive tax system, the tax rate is higher when income is higher. Let's see how a progressive tax system works. Suppose there are two income brackets, one for income that is below $75 and one for income that is above it. The middle income families have their entire taxable incomes in the first bracket. The rich have $75 in the first bracket and $900 in the second bracket. The total income in the first bracket is $175, and in the second bracket it is $900. Suppose the legislator requires that the tax on the second bracket be twice the tax on the first. Therefore, if the tax rate on the first bracket is T, the tax rate on the second bracket is 2 times T. The total tax revenue is the tax collected from the first bracket, $175 times T, plus the tax collected from the second bracket, $900 times 2T. Together, the taxes collected must equal $16. When we solve the equation, we get that the tax rate on the first bracket is 0.81 of a cent per dollar, and on the second it is 1 cent 0.62 on the dollar. We apply these rates to the incomes in the first and second brackets, and we get the total tax that each family pays. We can compare the taxes of this progressive system to the flat rate system. We see that under a progressive system, middle-income families pay lower taxes, while the rich pay more. There are two figures that together capture the tax obligation of a family: the marginal tax rate and the average tax rate. The marginal tax rate tells us how much a family would have to pay out of an additional or marginal dollar. We see that out of a marginal dollar, a middle-income family would have to pay 0.81 of a cent, whereas a rich family would have to pay 1 cent 0.62. The average tax rate is the fraction of our income that a person pays in taxes. This rate increases with income even for families within the same tax bracket. The average tax of the low middle-income family is 0.4 of a cent, but for the high middle-income family, it is 0.6 of a cent. The reason for this is the standard deduction. The $25 deduction lowers the taxable income of the low middle-income family by half, but for the high middle-income family, the decrease is only by a quarter. Percentage-wise, for the rich family, the deduction of $25 out of $1,000 is almost negligible. If we add the income after tax column, we see that no matter how high the tax rates are, they can never change the hierarchy of incomes. If a family is the richest before taxes, it remains the richest after taxes. The reason is that on the part of the income that the rich and the middle-class families have in common, they pay exactly the same amount of tax. In our example, the rich and high middle-income families have $75 in common, and both pay 61 cents on this sum. Even if the tax rate on the second bracket were raised to 99.99%, the richest family would still remain the richest, because the high tax rate applies only to the excess income that the richest family has above everybody else. This is a correct reflection of our tax system. For a married couple filing jointly, the 2020 tax rate is 37% for all the income above $622,000. If a family has an income of $100 million a year, the income below $622,000 is a small fraction of it, and its average tax rate is 37%, or very close to it, the same as its marginal tax rate. Why does the income tax stop being progressive when it comes to the very rich? This may be the legacy of the days when the top marginal tax rates were 91 or 92%, and going beyond these rates seemed excessive. By today, it is less than half those rates. Today, a marginal tax rate that goes up with the income of the poor and the middle class, but not with the income of the very rich, cannot be justified. Now that we know how taxes work, we are ready to ask what they do, not in theory, in practice. Different countries have different levels of taxation, and we will explore how these levels affect the well-being of workers.